Alright guys, welcome back. It's LSP. It's currently the 22nd of July 2019. Time is 10:30 AM GMT time. So, continuing on with our crude oil supply and demand series, you can see that I've opened a trade, which I'll go through in a sec. I'll preface the video by saying, obviously, this is all for education. Please don't follow along. That's not the whole point of these videos. The idea is to go through the different methodologies, to illustrate, whether or not these methodologies have any validity, whether you can use them in your trading, whether they make sense, so on. And again, all with the idea of kind of bringing reality back to the trader. We know as traders, if anybody's been trading long enough, even beginners, in fact, beginners will probably know this more than people who've been trading for a while, because they get a lot thrown at them at the beginning. That there is a lot of, there are a lot of ideas out there, a lot of trading methodologies, a lot of ways to trade, so with that in mind, the idea is to kind of separate the system, methodology, ideas, concepts from the trader who's going to be using those concepts and ideas and methodologies. Ultimately, I think we can all safely say and agree that, there are, for argument's sake, 100 different trading systems, and if you have a good trader who's grounded, who's solid, who understands himself, he's got his psychology under control, he's got his emotions under control and so on, can trade pretty much most of those methodologies and get positive results. Get positive results. Whereas somebody who has a gambler's mentality, has poor thinking, terrible habits, lack of discipline, who's very impatient and so on, will find all of those methodologies simply just don't work. And the frustration kicks in and so on and so on, which we can all attest to. We've all been through, that type of, up and down, with different trading styles and different trading methodologies. I personally went through it many years ago, and it is frustrating. It's very frustrating, because it's like, well, why doesn't this just work? And things like, you open a trade, price stops you out, and then it reverses and it goes in the direction, things like that. Being able to control yourself when things like that happen to you, and understand, that the market isn't out to get you. The market isn't specifically targeting you. The entire universe hasn't just decided one day, to forget the natural order of things and just focus solely on you, just so it can take your stop. This meaningless stop that's in the middle of nowhere, for example. So, with all of that said, like I said, focus, has to be brought back on the trader. The trader is what matters. Now, I'll give you an example to really hit this point home with this particular trade. Okay, I've been going through these supply and demand ideas. Okay, to see whether or not supply and demand has any validity. Does it work? Does it make sense? Okay, and obviously it's not just going to be this one trade or this one video. We're going to do a series of videos and see whether or not supply and demand makes any sense. As a concept, the idea of supply and demand obviously makes sense. You can describe it to somebody. Most people understand supply and demand. You can use supply and demand in the housing market in London, for example. Prices are going up because there's a lot of demand for people buying houses, mainly in the city of London. But a lot of people now who can't afford to, to purchase a home in the city of London because prices are so insane, are starting to come out to the suburbs, going towards North London and out into, the Hertfordshire area, where prices drop. Okay, I've actually seen a street. I spoke to the broker last year, and on the street, on one side of the street, there is a Hertfordshire postcode, and on the other side of the street, there is a Enfield postcode, which is basically London. And the difference in price, I shit you not, was £150,000 from one side of the street to the next, to the other side, So a lot of people have started moving out to the suburbs, okay, because the supply is greater. Okay, there's not that much demand, or there wasn't at the time that much demand for people buying homes outside of, the London border and going into the Hertfordshire border. But because prices are insane in London now, and they're starting to slowly creep out from the city into the suburbs, okay, the demand now has slowly started to go up, for houses outside of that area and towards the Hertfordshire border. So, prices are starting to slowly creep up, and eventually they're going to be pretty much out of whack again. The demand will dry up, and then people will start to again push a little bit further out where they know prices are going to be dropping, because you can save a fortune, anywhere up to £300,000 to £400,000 in some cases on a house. So, like I said, everybody understands the idea between supply and demand. But going back to this trade and what I was going to say about me personally as a trader, as I've said in a previous video and many other videos, I personally can't hold on to trades. Now you'll see the target on this is around about 200 pips, okay, which is very wide. But I've done this in a way where I have to be as objective as possible, and I have to allow this stuff to form. Do you understand? So I can show whether or not these ideas make any sense. So I've opened this trade. We've come up into, and I'll just go back up to the daily for a second. You can see, we have this daily demand area down here, and we've got the supply up here, and we're in an area which we should theoretically, based on supply and demand ideas, get some sort of a reaction, and we should start to move lower. Okay, technically there are other things in play in terms of the supply and demand ideas. I draw my supply and demand zones slightly different, to some of the mainstream supply and demand ideas, because it excuse me, it works for me, and I can hone in on specific areas. Doesn't necessarily mean I'm right or wrong. It's my way of looking at the charts. But we've come from up here. We've had a really nice drop. Okay, just look at the structure itself, and we've kind of based a little bit here, went sideways slightly, had a really nice pop away from this level, takes out the high here, some nice reaction from there, which is quite aggressive. That drop there, nice drop, pushes all the way back up again, takes out the high up here, fills in an imbalance on this side, and then we get a really nice drop, takes out the low. So for me, just based on structure, okay, we should start to drive lower at this point. I'm not saying we will, but we should start to drive lower at this point. And again, I'm going to leave this trade. I'm going to force myself to actually leave this trade. It's going to be very difficult for me, but I'm going to force myself to leave this trade, because I have something bigger in mind. Okay, there's a much larger thing in play here. This is not about me making money on a trade or losing money on a trade. This is not about this meaningless one trade. This is about me illustrating a supply and demand idea. So I have to leave this trade. What I'm saying is, me showing whether or not this works as a methodology is much more important than this one single trade, which is going to allow me hopefully to just hold on to this trade, let it do its thing, and not worry too much about it. Okay, so with that said, going back down to the 4 hour, okay, we've hit this this 4 hour supply, and so far we've had a decent reaction. And you'll notice I've put the stop above this high here. Okay, which is right through the zone, so I've given myself plenty of space, around about an 80 pip stop. Okay, so the trade is roughly, so it's about an 80 pip stop. So the trade is roughly just over 2 to 2. Just over. It's about 2.2R basically, give or take. 2.1, 2.2R. All right. So I can't get out of this trade. I can't adjust the stop. If the only way that I can adjust this stop on this trade is if it comes down to at least halfway. Okay, if it does that, then I can bring the stop down. But for now, I wanted to get this on video so you guys can see the trade. We'll monitor the trade, and obviously we'll discuss it. You can see it's just a 0.10. And just to really emphasize something, because somebody asked me this, that I had a trade on. It wasn't in a video, but I had a trade on, and a friend of mine, he's looking at the charts. He's like, "Shit, man!" He goes like, "You're doing 10 standard lots," and I was like, "What?" He's like, "That's insane." And I was like, "No," and he pointed to the position, because I was showing him on my phone. He's like, "Fuck me, man! How much money have you got in your account?" I was like, "No, man. When I open what looks like a 10 standard lot on this account, it isn't 10 standard lots. It's one. So if you ever see one on here, it's a 0.10 on a standard account. This is a spread betting account, which basically means one standard lot on this account is the equivalent to a 0.10. Yeah, 1/10 of a position, 1/10 of a standard lot on a standard account. Okay, my main account is a standard account, so if I had a position open, with what you see now, 0.10, it would be the equivalent to 1/10 of a standard lot. This isn't. Okay, for me to open a standard lot on this account, it would be 10.00. So, that's the equivalent to one standard. It's just the way a spread betting account works. So, I'm not sitting on a $3 million account. Do you know what I mean? But I wanted to illustrate that because, number one, it's important so there's no misunderstandings and miscommunication, because I like to be as transparent as possible. And number two, more importantly, it's a very small position on this trade. So I'm just, like I said, I'm leaving this trade. I'm going to let it do its thing. I'm certainly in no rush, to get in or get out, to push this or to make it do it. I'm just going to let it just flow and do its own thing. So far, like I said, we've reached this 4-hour supply, and we have an area below us which makes sense. There are also some stops below here if we're just going to add other little ideas, and we'll see whether or not this idea works. Now, if there's a couple of things. If the trade works, great, okay, but I'll talk about two scenarios, okay. If the trade works, okay, and then we review the trade, just have a quick drink. If the trade works, and then we review the trade afterwards, okay, and obviously one trade, right, it's just one trade, does that mean that the methodology works and we can just go ahead and apply this supply and demand idea and off we go, to all the pairs and just make loads of money? Of course not. You have to break everything down. You have to look at the areas that you've marked out, the structure, the context, and really start to get a feel for, we've got one trade under our belt with this supply and demand idea, this methodology. Okay, we're going to track the results. You break everything down and you say, this is what I was looking for. This is how I drew my zones. This is how I made things work. This is how it made sense to me. Okay, and then when we open another trade, again, we will compare the results, and we keep doing this and we keep doing this until eventually we get to a point where we can say, all right, look, it seems, and remember, I'm trying to do this as a kind of like somebody who's new to supply and demand, right? Although I'm not, I'm trying to do it in a way where I'm kind of new to supply and demand. So I'm drawing the demand zones and supply zones in a way where hopefully, if a trade doesn't work, I can point out why it didn't work. And if a trade does work, again, I can point out how we could have improved on that by drawing the zone slightly different, okay? So if the trade loses, we can again do the same thing. We can start to break down the trade. We can look at what could have gone wrong. Okay, trend-wise, are we going in the direction of the higher time frame? Does it make sense that we actually took that zone and maybe not one that was slightly higher or slightly lower, depending on which way we're going? Are we following a set of rules that we can apply consistently, to every trade? Is there enough, area between one zone and the next? Is it a clean zone? Is it a fresh zone? Is it and so on? And all of this stuff we're going to kind of meld together to get a good feel and a better understanding of this methodology and whether or not it has any validity. Okay, and then hopefully over the course of I've been wrestling with the number of trades that I'm going to need to take per methodology for this to make sense. Now, obviously, I don't want to, because this is going to take forever, but I don't want to take 100 trades or 200 trades, which is a good it's a good sample size to have and to go through the results and the statistics and the data. But if I do 100 trades using this methodology on the time frames that I'm working with, it's going to take years for me to do that. Obviously, if I drop down to the lower time frames, I could do some scalping, but that's not my intention at all. It's not my intention at all. So maybe we do like 10 trades, for example, just to kind of get a basic feel for the supply and demand methodology, and then we jump on to the support and resistance methodology, and we do sort of another 10 trades on that one. We'll assess that and so on, and then we'll go on to the next and the next and the next, and then eventually, once we've built this huge library, this huge library of videos going through each of the methodologies, we can then start to look at not necessarily which is the best methodology, but the trader who's trading those methodologies, is he consistent throughout all of those methodologies? Yeah. We should, theoretically, after going through each of these methodologies, and there's quite a few, so we'll go through each of these methodologies, find some consistent, repeating biases, psychological biases, like we should find basically a consistent and repeatable psychological makeup of the trader, okay? The methodologies themselves are irrelevant, and you'll understand, the closer we get to the time when we've done quite a few of these, you will start to understand how the methodology itself is literally irrelevant. Honestly, it's irrelevant, okay? Everybody will settle on something that works for them, okay? Nobody ever truly copies somebody else's methodology. You meld things together, you have your own different ideas and everything else, but nobody ever truly copies somebody else. It's just, I personally believe that's impossible to actually, copy exactly what somebody else is doing and make it work for you, because there's so many different variables, from a psychological standpoint. So again, not to overexhaust this video, I do firmly believe that the emphasis will come back on the trader, and it's going to make more sense, the closer we get to, the time when we can kind of look at all of the data together, and see, how, how all of this kind of plays together and what role the trader has in all of this. Okay, so I will leave it at that. The trade, just going to leave it now. Stop, target, kind of irrelevant, really. It doesn't really make a difference. One of those two is going to get hit. Hopefully before the expiration of the contract. Obviously we're trading crude oil, so we have to we have to be mindful excuse me, of when the next contract, or when this contract expires and the next one starts. So obviously if the trade is still open closer to that time, then I will make adjustments for that, okay, because I can't do a rollover contract on this particular account. Or maybe I can. I'll speak to the broker. I've got no access to doing that. I know when I used to trade with IG Index, there was an option, to just tick that every position that you have literally just rolls over into the next contract. So I'm not sure if that's available with this particular broker. I can't imagine that it wouldn't be, but maybe I need to speak to them, so I'll see. And again, all in the interest of leaving the trade open. It's not about, anything else other than that. I want to leave the trade open and make sure it does its thing. So I will speak to the broker about that. And that's it. All right, guys. So I'll leave the video at that. Again, I'm gonna allow the trade to just unfold. Okay. I'll let it move around a little bit. If it starts to move into profit, I'll let it kind of go, and then we'll wait for some movement first, and then I'll do the next video. I'm not gonna do a video every single day. I want people to be able to go through these, comfortably, and not, have their eyeballs bleeding because they're staring at a screen for, 25 hours a day, which is just an exaggeration, obviously. All right. So again, leave the trade, see what happens, and I will catch up with you guys in the next video. All right. Take care, and I'll speak to you soon.